Good afternoon, everyone. Good morning, good evening, wherever you are in the world. Hope you are well. It's finally Friday. It's the 22nd of August. We're coming to the end of the third week of August. I think it's week 34 of 2025 already. Last week of August, next week. Next Monday, the 1st of September, is Labor Day in the US. Markets are closed in the US next Monday. This Monday coming up, 20, what is it, 23, 24, 25 is bank holiday, late summer bank holiday here in the UK. So Forex market, London will be closed. So liquidity significantly reduced on Monday. So watch that on Monday. Obviously, watch the close tonight as well on the Forex markets. Obviously, Friday's key close, the close of the weekly candles. We got the euro here next to me. Let me just get my huge head a bit smaller. There we are. Chart's a bit bigger. There we are. Euro tracking lower this week here, the 15th. Well, actually, take it back a bit here. 17th high here on the 13th. We're all the way up here at 117.25. Leg lower, retrace, not as high as we had been. So we got a lower high from this high, a lower high here on the 19th, a lower high here on the 20th. You know how this is going, don't you? A lower high here on the 21st, lower lows throughout this week. And this morning, here on the 5 o'clock candle, we went all the way down to 115.83.7. We've bounced since then. We're back over the key 1600 level. 1600 is this big. Is that 1600? Might be. I'm not sure if it's 1600 or 1602 or something. But anyway, through this blue line here, which is a 1600 line. So we're up a tick at the moment, and we're looking to take as long. But first resistance will be there at 116.28 or so 116.30 the upside for the US market. US traders are in their docket. The reason for the continued weakness this morning in the euro was the German GDP this morning, disappointing quite significantly. Can you see that? Yes, you can. German GDP on an annualized basis, a miserable 0.2 of 1%. It's not helping the new Chancellor, Mr. Mersch. Lots of political divide in many developed countries. None more so than perhaps the UK and the United States, but certainly the same in Germany. And we were expecting a tick up here, you see, on the annualized number and a tick down on the quarterly number. So the second quarter GDP for Germany was pretty miserable. It came in at negative 0.3 of 1%. That dragged down the annualized number to 0.2 of 1% from 0.3 last time, and significantly worse than was expected at 0.4 of 1%. Obviously, that weighs on the wider EU data as well later this week. As we said yesterday, Jackson Hole Symposium got underway. It's a big old talking shop, and really that's following the Fed minutes on Wednesday evening. It's really what Chair Powell has got to say in an hour or so. About an hour and a half at his meeting. It's the last big speech at Jackson Hole that Chair Powell will make as chair of the Federal Open Market Committee. Lots of other speakers over the weekend. Trump has a press conference also scheduled for a couple of hours later, so there'll be obviously reference to that. He'll be asked questions by his pliant journalists in the press room in in Washington. About obviously what Powell's got to say in an hour and a half. So really markets getting weighed by that. So dollars, as I say, a wee bit stronger, or has been a wee bit stronger this morning. It's come back again, the euro back over 116 on the jitters about what Powell may have to say about expectations for rate cuts. Say we got 8 minutes to the Canadian data. I'll come back to the Canadian data when it drops in a minute. Retail sales, obviously, retail sales are a key component of any developed market economy. Less significant than it used to be in the old days when I first started trading, but still a significant data point. And Canada has had some really mixed data recently, so we'll see what that looks like in a wee while. So sterling, so let's have a look at Canada. I'm talking about the Canadian dollar. I'll come back to that, obviously, when the data drops. So the dollar continues to ramp up. It hasn't stalled like it has against the euro so far this week. Big move here on the 19th on that big candle there, breaking higher. from this range we'd been in. Remember we talked about that earlier this week, last week, I should say, that the dollar CAD was in sort of flipping around 139, couldn't break 138, couldn't break away. Breakout candles there on the 19th on the hourly basis. Another consolidation here through 38.75, and then yesterday we went and touched and breached and then broke the 139 handle. So touch for 4 or 5 hours, dipped away, didn't break lower, didn't go under the high of the 1 o'clock candle yesterday, and then breached it here in the evening trades, and we've ticked higher through the Asian session and the European session. So dollar CAD trading at 139.17. If we tick this up the time frames, you see it's a significant move through 138 and a significant move this week as the dollar's improved, and obviously the Canadian dollar's weakened as well. It's been weak for the Canadian dollar. So one through the key pivot area of 138. We broke away from that on Tuesday, and here we are Wednesday's sort of doji day, and Thursday the big break through 139. So that took us to an area we haven't been at since late May. So significant move through 139 for dollar CAD. Can we hold that into close? That's what most end of day traders we're looking for. But big move here. As I say, we've been north of the 20-day moving average since the 25th of July. So it's been a good August for bulls on the dollar CAD move. First big positive leg, unbroken, retraced at the beginning of the month, and then we've sort of leveled out, found a support on the 20-day, and then off we go and up we go for the next wave higher for dollar CAD. Aussie trades at 64.25. Dollar with the big pants on there today. We're down, and yen 148.16. That breakout again yesterday through the 147 area and over 138, and we're at 138.50 this morning. So again, can we hold this break to the upside? So dollar bid against many currencies, and it's holding it. Is that going to continue? And it's all to do with the weakening of expectations around what seemed like virtual near nailed on chance of a rate cut in September. It's expected that if there's any indication from Powell later on that it's not happening, and that's what's happened now. We've been priced down. Earlier in the week we were at 94%, 85%. Here we are, 71% chance. So it's a significant reverse. Yeah, a significant reversal this week so far. If we see here, 71% of a rate cut on the 17th of September when they announced, compared to a week ago where it's over 50, 85%, and it had been even higher than that as well in the early part of August as well. So it's come back quite significantly. It's lifting the dollar. Will that continue? We shall see. So 4 minutes to the data. Let's run through. Well, really, that's the main news of this morning was the German data. There's not a lot else to talk about. We'll wait for the Canadian retail sales to fall, and then we'll sort of preamble around what Powell might say. I'm not going to stay on till Powell's speech. I want to listen to it myself as well, and because it could be a major move. But ahead of that data, so the dollars remain strong. So this again could be a reversal waiting to happen. So where could we reverse? Well, here there's no clear idea here from the daily chart. We had a strong day yesterday. So the top of the previous channel here, for instance, on the yen is at 148.15, so above 148. So that would be a support area to hold or be tested as the data breaks later on. And the 20-day moving average now has ticked up over 147.60. So that's another key support area to the downside. And the 50-day sits down there, breaking out the bottom of that channel under this 147 area, and it's trades at 146.80. So there's the higher time frame testing support levels, possibly on what Powell may or may not say. Obviously, the upside, we've got the big round 150 level as well. 149 before that, but 150 is the next big line of sand for dollar yen. So you can do the same thing for all your assets ahead of that. So let's just go back to the CAD and say the CAD dollar has had a good run this week, started last week against the loonie over 138, and as you said, broke 139 yesterday and holding it. So can we hold that going into the end of the week? These April high. See what this data looks like. I say data's been quite mixed out of Canada. Some of it's been quite weak. We'll see what it looks like in a minute. A minute to go. So 1.3% is expected. Sorry, I haven't talked about that, have I? 1.3% is expected on the monthly retail sales. The core number 0.9 of 1% from minus 0.2. That's the core number. That's probably the most important number. The headline 1.3% potentially on a monthly basis. We'll see what that looks like. We've got July and June coming. Actually, interesting. I wonder when that was. I've noticed that before. But anyway, see what that core number looks like in a minute. So, as we said earlier in the week, the minutes really, as on Wednesday, sort of added to this sort of bid on the dollar, given that it was only Collins and Bowman that were looking to cut rates in July. The rest of the committee were quite, mentioning and raising the issue around inflation, the stickiness of inflation, the fact that particularly the service inflation could sort of tick up quite significantly. We haven't seen the full impact of the tariffs, but the tariffs have been around for a while now. They are being getting collected by the government. So it seems like, particularly what Walmart was saying yesterday with their results, it seems to be absorbing it themselves. They were talking about squeezed margins, the huge retailer Walmart yesterday. So, but we have had a big move down in the stock market. So let's just take this down to the 5-minute time frame as even the 2-minute time frame as the data comes out. So dollar's been up from this low here. So we had a big move. 10 minutes bid 10 minutes before, but we stalled at the high of the day. So we didn't actually get to this high of the day, interestingly, 139.18. So that's the one to watch, really. We're going to go back there on this data release as it comes out as we speak. So just put that there's a high of the day. We sort of reject it. There we go. So the data's breaking now. And you can see we'd already rejected the high of the day. So the suggestion was that we may be short, or you may be getting pulled in to take a short that's not going to play out. So again, using the strategy, it'd been long here, started short, didn't work out. That long didn't work out, reversed very quickly. So a nice short run there, nice long run here, and now you would have got out, or something I would have done before the data broke. So let's just have a look at what the data looks like. It's coming better than expected, 1.9% for the core number from minus a negative 0.3 of 1%, and the retail has come in month on month 1.5% compared to 1.3%. Let me just update the calendar here. So the move down for the dollar, or the Canadian dollar, bid on that better than expected. Sorry, it's the week, isn't it? Just put today on. The better than expected retail numbers here. So there we are, 1.9%, significantly better for the core there than the decline we saw last month, although it has been marked lower than it was last month as well. So 0.3 of 1% from 0.2 of 1%. Retail sales here, 1.6, low, a bit under the 1.6 that was expected. Sorry, 1.5, bit under the 1.6 was expected. And again, last month was actually recorded a tick lower as well. So previous months have been wound down. The market's reacted to this key core number at 1.9%. So it's given the Canadian dollar an immediate lift on the data. How long it holds that for, we'll see, won't we? So again, if you're trying to trade this with your standard chart, remember you can't, you're not allowed to trade it 2 minutes before. So there's the 1328 candle. I mean, a lot of people complain about this, but in my humble opinion, for what it's worth, this discipline of not taking positions immediately on the news, it allows you to see and understand what may have happened. Okay, is the move in the immediate direction of the data going to continue, or is it going to reverse? And that's what we're looking for. So where could this reverse? Well, this low we saw here at round about 1 o'clock at 139.10, so still 10 pips above the key 130, is relatively significant as well. So we put that in as well to the downside. So that's our immediate sort of low area through here. We call it 139.10, 139.11. See this cluster here on these 2-minute candles. The immediate low was this bit here through here at 139.13, which we've sort of been into already. So the initial reaction was down, and it seems to have perhaps played out already. Obviously, it's a bit too early to tell on these short time frames, but certainly the first clue that we might not be going higher was the fact that we didn't get higher immediately before the data came out. We were higher than the daily high we'd put in here. The caveat to that was it was a relatively good move higher. It was higher than the one here we'd seen at 11:10, 20, and higher than the 8:40 and the 7 o'clock peak as well. So that had been sort of moving out. Obviously, we went down here, but the immediate question was a bit mixed because we didn't get to that one, but we were better than that one. So wait for the date, and then data was good for the Canadian dollar. So we've weakened. Is it strong enough to push us down to this low of the day? Perhaps not, but we'll see. At the moment, we have moved down. So that's the data. That's the end of the 2-minute candle. So you'd have taken a short now, standard traders at 139.13. Those that you can trade the pro account. If you paid for a pro account, you're not. You can trade the news. So again, you could see that the high wasn't as high as we'd put in here at 11:40. Yes, I'm saying yes, it was better than this 11:25, 12:25 spike up, but that was an outlier, wasn't it? As we've gone up, and that was a bit of it's still in play because we've come. So we were in that range. So the immediate news took us low. We bounced a wee bit, but not much through the 50 here. So here, 2 minutes in, short there at 139.13. Or you'd have taken the short there on the conclusion of the first minute at 139.13.6 or 139.13.1. So are we going to continue to move down? Or, as I say, was the low at 113.12? Again, time will tell. But this strategy, if you like, had been long here, up, and then gone short here on the data. So are we going to follow through? We'd look to, if the move continues to move lower, we'd look for that 139.10 area, 139.10.8 or 139.11 itself. So not many pips, but enough to cover the spread and to move you down. But as you can see, spread's relatively beefy here on this short time frame. So is that enough to change the direction of the day? Because this is one of the main data points for this pair. Obviously, we've still got Powell to come. So if we go up, like the 5-minute candle, because that will have concluded now. It's difficult to tell, isn't it? So we were up before, down on it, and up. Certainly the higher time frames, like the 15-minute, remains relatively bullish. Quite a lot of volatility coming into this data, but still relatively bullish. We're above the majority of the time above our 20-day moving average, and the 50-day moving average. Test it, back above it, test it, back above it. So that's 15-minute candle is still bullish. But again, there's that high of the day we put on our shorter time frame. That's your upside target if it's going to get it. Again, as we said in the lower time frames, the fact that high hasn't touched that 139.18.5 suggests that might already be in. But remember, we've still got the cash open an hour away, and we've got Powell to go. So these are just areas to watch ahead of the man's speech later on. It's very close, so it's probably going to get tested at some point during that conversation. We go up to the, when I trade at the hourly time frame, let's just reset. As we saw, that's still bid. Nothing to get too excited about. It depends where we were. If you were trading this, my stop loss would be down here below the 20 hour moving average at 139, just over 139 itself, 139.02. I may have got a bit more aggressive here, but I'm going to wait, as I say, until the midnight hour, until Powell's had his speech, but I've already plotted the high of the day a couple of hours before the main event of the day. And now you can see on the hourly chart, looks like we've already tested in to the previous high of the day, and we saw on those lower time frames that wasn't the case. But that data, I would watch the data here as an hourly trader, but I wouldn't have changed much. Whether I'd left the stop loss there just below the 20-hour moving average, probably been a bit more aggressive. 139.055 is probably where my stop loss would be now if I was trading this. I've got some live positions here on the hourly time frame this week. Nice breakout there again this morning as we've gone across this. See this top here? We've broken out of that and followed through, somewhat inevitably getting to 139, stalling for a few hours, moving away. So if we hold 139 today, following Powell, that will be the dollar remains strong against the loonie, despite that strong retail numbers out of Canada. So we could that might then raise the spectre of perhaps not flip the sentiment back to perhaps we can cut rates in September. But again, a lot of depends how much indication Powell gives. He's done it before. I don't think he's going to be doing it today because it's in a massive political pressure, and that again, Trump and his crew will say, "Well, we told you so. You're just late." And that's what he's called him. He's called him some quite derogatory terms, personal attacks on Powell. Powell hasn't returned any, particularly. He called him out with his letter when he was actually visited the Fed about the federal building, the long-term building notification. Then obviously this week we had that attack on Lisa Cook as well from Powell's administration, claiming mortgage fraud, which is quite a serious, or is a very serious issue for anybody. But as a member of the Federal Open Market Committee, it's heinous, and you should be resigning if you indeed it is true. But whether it's just more blah blah from the president and his crew, again, only time will tell. So dollar CAD remains bid here on this hourly time frame, 15-minute time frame, a bit more choppy. As we've seen, we are down here as the 15-minute candle is about to complete for the first time. But it'll be interesting to see if this remains engulfed by the previous positive move up. So that again will be relatively okay for the dollar and not as positive as the Canadian dollar as it might seem from that data coming out. But still a few minutes before that concludes, right into its 20-period moving average there. So the shorter time frames, the 5 and the 2 minute, I would guess remain short. As the move down, as the 2 minute. So we've got short there, it's gone against us, but we're now back in the money here. But our stop loss sort of up here on the big candle, and the 1 minute traders short, retrace quite a bit, but then we've come back quite quickly as well. So again, still short this. So the move lower was bought for 3 minutes, and then we've moved back. Again, quite relatively big candles, look positive. But again, look, where we were less than, again, if we just use the fib as an indicator for the actual minute, I mean, this is the beauty of Fibonacci. You can do this for all time frames. And this is literally the minute as the data's dropped. So if you were literally trading the minute range of the news announcement, what happened? Well, look at that. As if by magic, we retrace. Where did we retrace to test? The magic 61.8, the magic golden ratio was tested. So immediate down, retraced out, and now we've broken out of the bottom. We're lower now than the lower the immediate news and the wick of the lows. So next downside target could be 139.12, and then that 139.11 area, the green line we got down here. So let's see what happens as we go down. So classic move. Big move down, retrace 61%. Sellers there, couldn't break the 61, went straight through. Sorry, it's the 50, isn't it? Sorry, it's not the 61. The 50 is where the candle stopped. The following candle created a pivot high into the 61.8 here, literally on a minute basis, and then shorted shorts here, and they're nicely in the money again there. I would have been a bit too active for me, but I would have been short. Certainly, I probably had a standard account. I would have been short off the second when I could have got in here at the bottom of the range actually at the moment, but it's that's worked out well. I need to see this moving down at the moment. It's not. It's up. So minute trader in the money, 2-minute trader not quite in the money at the moment. But dollar CAD moving down. Right, let's have a look at elsewhere, guys. If there's anything you want to talk about or any other assets you want to see, let me know. There's our messages in the bottle there. So retail sales from Canada, much better than expected. The headline coming in at 1.9, sorry, the core coming in at 1.9% for June. The annualized number was weaker, though, for retail sales. It hasn't got the annualized number on there for some reason. It was on my other calendar, my Forex Factory calendar I had out. So the Forex Factory calendar here, you can see where are we? 1.5 better than expected as well on a monthly basis, and the core 1.9. So better numbers from retail numbers out of Canada there. So that's dollar CAD. So let's have a quick run around the assets. So we've had a bad week for Billy Bitcoin, and we've been in to test the 112,000 area, the area we talked about earlier in the week, and yesterday, this morning, in fact, we've been sorry, let's take this under the key 112 area this morning here. Sorry, last night we were into the 112 area. Rallied up, but in the last hour we've been again under 112. So the down move this week continues. We'll see what the weekend is like with regard to the 112,000 level, but many will have closed out shorts. I know many people were looking for that short rally run. Sorry, I should say rally run into 112,000. We talked about it earlier in the week, didn't we, as the next big level. And here we are hitting it on Thursday at night. So that still remains short there. You can see clearly on the hourly time frame, the 50-hour hasn't been tested today or much yesterday. It was broken through on Wednesday, but sold off again down. The 4-hour candle's a bit more of a steady move lower. Move down, retrace, move down, retrace. But again, as we talk about all the time, the size of the body of the candle is absolutely fundamental, absolutely key. And you can see the size of these negative red candles much bigger than any of the green candles. So the trend remains very much to the downside. There's our 112,000 on the blue line. So trend is broken here, run all the way down to target. So, many will be out of that move, some from 119,000 to 112,000, $7,000 to the downside for Bitcoin, having literally a day earlier been as high as 125,000 to 24,000. So significant trend. Down we go. Do we hold here? That's the big thing. History is suggesting we will. That's the daily time frame. It was a significant level through here. And we've broken it. We've come into it for the third time. So this could be a sort of triple bottom area. Obviously, this was not necessarily a triple bottom. It was a part of the rally to the upside, which was sold off and then rallied to the new all-time high. So this is not an untypical move for Bitcoin. A bit ugly this week and last week, but will 112 hold? That's the key thing for the final week of August and as we go into September for crypto. Let's just do these in order. Oil has continued to get a leg higher this week. Here you can see we were caught out trying to take this short earlier in the week and stopped out yesterday as we went under the 62 level, under the 61 level on the US on US oil. The inventories has helped lift expectations, and also the cooling of the what was right positive at the beginning of the week of the deal perhaps being made. Last night, Reuters were reporting what Putin really wants, which is all of Donbass. No NATO membership from, or not even thinking about it, from Ukraine, and no European boots on the ground in Ukraine. That last one isn't going to happen, I don't think. I think there will be European troops on the ground. The NATO membership was probably not going to happen anyway, in all honesty, immediately. But remember, Putin, Xi, these guys, China, Russia, they play for the long term. Putin's a very, very astute politician. Been in power for 20 years. Trump's on a rush because he's only got 3 years left. He wants the Peace Prize, clearly, Nobel Peace Prize, and he's pushed hard for this, and he's getting a bit of a knockback. Very aggressive attacks on Ukraine overnight as well from the Russians. So we'll see how Trump responds. Putin potentially trying to call his bluff again and play him again. This week's meetings, last Friday and Monday's meetings, the most significant of the 3.5-year conflict. But it's serious. People are dying, and people continue to die, and it's grinding on. And both sides are dug in. So these land gains that obviously, clearly, Ukraine doesn't want to give up, relinquish, may have to be on the table. So it's as I say, let's see how it all pans out. But as far as the oil market's concerned, it's taken that quite negatively. Our expectations of a deal coming. We've moved high. We still are yet to break the 20-day moving average at $65 a barrel, but it's been a relative positive close to the week for the oil market. Although that actual chart pattern here, guys, is actually quite negative. So we've had a significant move down, a rounding bottom round through the 63 level. We haven't broken on an end of day basis the $62 level where we were back in June, but we're coming into obviously the winter months now, and it's obviously a big demand season. The driving season's has come to an end, or coming to an end. So key area to watch is obviously back to the $65 and a break of the 20-day moving average. But it's been a relatively good week. Well, you can't really tell that significantly from those candles for oil. We've done most of the majors. The Aussie CAD we talked about. Swissy 80.82. Again, sort of range bound a wee bit. We were short here earlier, or last week. Was that the 13th? Yes, a couple of weeks ago, isn't it? I don't know if that paid out. I'm not sure. Doesn't look like it. The target's there. Obviously didn't happen. So sideways action from a really strong, or having been a really strong Swiss franc move this year. Dollar recovered here into the beginning of August, and then we've sort of been range bound and topped at 81 200 Swissy against the dollar. Kiwi, obviously, we had that massive move lower on Wednesday following the 25 basis point cut from the RBNZ overnight. That's Wednesday's candle. Thursday, we're sort of reassessing where we are, and we're down again today. So we're recalibrated from this rally to 61 and holding 60, and then 59 being a pivot and support area for most of August. Looked like we were going higher, back to 60. Didn't happen, and the move against the Kiwi has been coupled with a strengthening dollar. So significant break of the .59 we've seen this week, and we're down to new lows. We look to the left, and it takes us back to these. Just take the volumes off of that. I'm confusing a wee bit. Takes us back to this capped level here at the beginning of April, when we were moving. The Kiwi was moving up against the dollar here from the back to that range there, following the hiatus of the beginning of April and the Liberation Day. So we're moving up. So that's a key area where we've got to now. So this may be the new settlement area, 58, or just above .58 for the Kiwi. So that'll be interesting to see if that level holds or we break down again. And this is our new level again, back there for what looked like a stronger Kiwi. Dollars come back. against the commodity currencies, particularly. So we could see that rolling over as well. Sterling, as I said earlier, giving up 135 this week, and much like the other currencies against the dollar, moving to the downside into 134 now. Today, holding it at the moment, but significant that we closed right on the 20-day moving average on Wednesday, and we were down yesterday, triggering a short position last night here at 134.10 on this strategy, having been long for the first half of August. Into test 136 didn't happen. 1, 2, 3, 4 days under 138. That would have triggered some shorts on higher time frames on the 50-day moving average. My little strategy doesn't trigger until the 20. Gone short here, so we've already moved down significantly and moving lower as well today. Does 134 hold as we move forward? Stocks have had a really poor week. One of their worst weeks for a while, which is the Dow, which is doing better than most. There we go. It's just down. Certainly Nasdaq and the S&P have had a really bad week. But yeah, it's still a relative sign of strength. But look at the size of the candles this week. Very narrow, very small ranges. Typical August sort of setup, but we are still at high. So the enthusiasm to take this any higher looks like it's petering out. Look at those small candles there. 1, 2, 3, 4, 5, 6, 7 days now, just struggling to move higher. Any trigger short needs to be a breach of this 20-day moving average initially, and then alarm bells would holler if we breach 44,100 as the 50-day moving average breaks for the Dow to the upside. So it's looking like we are running out of steam. Strong rally up, retrace, another rally up, could be last of the summer wine, if you like. Down into the 50-day moving average here at the end of that final week of July as the dollar picked up. The hiatus of non-farm payroll on the 1st of August, bought back immediately on the Monday. Sideways, some good final earnings numbers last week, and then sideways this week. So really watching that. Not getting too concerned at the moment, but the sell-off when it comes could be quite significant and relatively healthy as well, because look at the way we've bounced back from the sort of panic low at the beginning of April, and it's come back relatively nicely in the stage like rally, steady rally consolidation. But again, look at these candles looking a bit smaller than the ones we'd had here as we continue to move up. So we may be running out of steam, or this is just a stalling before the next final quarter. So September, the final month of the third quarter, could be particularly volatile, as it often is, and then we perhaps see a final burst off a rally into the end of the year. But again, time will tell. That's the Dow, which has done okay. If we look at the other two, the Nasdaq 100 in particular, already this week under its 20-day moving average, getting into test the 50-day moving average zone. So you can see we've had 1, 2, 3, 4, 5, 6, 7 consecutive days lower into yesterday for the Dow. Let me just see if I can make that a bit bigger now. Bring it down a wee bit and then make it a bit bigger. Let's move these indicators a bit down a bit. Make that chart a wee bit bigger. There we are. Make it a wee bit bigger. There we are. So see, if we're talking about this week, you see, 6-7 days to the downside. But again, the rally still is very, very strong, isn't it? So a test of the 20-day, test of the 20-day, a test and break of the 20-day. Last time we went back up here at the beginning of the month. This time it was after 2 days. We had a strong candle to the upside here in June. We haven't had that yet here in August, as we've again see that rounded top, a flattened top. So again, all alarms set, really alerts set at the 50-day moving average, which sits at 22,900, and a similar pattern here for the most important of them all, the S&P 500. Again, into the 20-day on Wednesday, closed just on it last night. We were down last night into close again. So it's a 1, 2, 3, 4, 5 consecutive days lower. Bounced a tad this morning today, but we're right on that 20-day moving average, and all eyes on what Mr. Powell will say in an hour's time. So 6275 is where the 50-day sits, and that's that low there that we got on non-farm payroll day took us within striking distance of 6.2. So these are the two big lines in the sand. I'm certainly got locked in 6275 and 6200 on my S&P 500. Sort of bullish rally that is still in play, but signs of a rolling top certainly in place. All-time highs just last week getting played out or sold into at the moment. Let's say all the earnings are not done and dusted. We got Nvidia on Thursday, sort of the new Apple from a few years ago. So big old rally. And a bit of a feedback, a bit of a sell-off is relatively healthy in the longer term. And finally, gold 3325. So we broke the 3330 zone, negative. But again, as we were saying yesterday with the guys that were with me yesterday, trading gold, this sideways action just continues, and really another blur, I should say, of a daily session. Very little range. Very little to get excited about. The 3350 remains a stubborn resistance to the upside. Fridays can be quite volatile sometimes. Obviously, we've still got potentially the biggest news of the week still to break, so anything is still possible. So 3350 to the upside, 3200 to the downside, and we currently trade at 323. So the hourly candles are down so far today through Asia and through the European session under the last week's PPI and CPI lows again. So new lows again. So again, that's sort of moving to the downside. And on Wednesday, we went to 3.315 area, didn't we? So that may be tested again on anything that Powell says or doesn't say, or how the market interprets what's going on. Okay, so I'm going to leave you. I'm going to go off and listen quite intently to what the chair has got to say in an hour or so. Well, exactly an hour. It won't be necessarily leaked, but those in the know will know. And I say my interpretation of it, for what it's worth, is he's certainly not going to kowtow to the administration. He's going to say he's going to remain, tread that, talk about the dual mandate, tread the data dependence, talk about the concerns about inflation, the impact of tariffs being, he said it before, it's a one-off situation. So it's a rebalancing with the US economy, signs of the jobs market cooling certainly, but not to any great degree. So they're still of the mind to hang on. So again, as I say, the interesting numbers are these. Really, remember these futures positions here from the CME are what the real skin in the game traders have got. So we've gone to a less than a 72% chance of expectations from the options and a futures market on September the 17th. Today, compared to, as we saw earlier, compared to 85+% this time last week. So a significant turnaround. Although expectations have grown significantly from a month ago, as you see here, a month ago, ahead of that week, non-farm payroll on the 1st of August was at under 60%. So a significant run up, and we've cooled back to 70%. So still looks like that's going to happen. Anything he says today to either compound that or react to that or contradict that will obviously have a major move on these expectations come the end of the day, and lots of talking over the weekend. And before that, we obviously got we got Trump's press conference after the Fed chair has finished speaking. And then over the weekend, we still got plenty of members of the board. Of the boards, I should say. We just go back to the Forex Factory calendar here. See, the symposium goes on Saturday. We've got Lagarde and Bailey tomorrow. Dia from the Central Bank of Japan on Saturday as well. There's a big panel discussion then at 5:30 my time tomorrow. So let's see what that looks like as well over the weekend. But again, this is what this little chart here is what is driving the White House ape. US top of the shop by a long way. At 4.5%, and UK and US a bit detached from the rest of the world. We had this cut this week from the RBNZ. We had a cut from that Aussies a week or so ago, and Euro area looking at 2%. Likelihood of rises from the yen area is sort of cooling. It's very mixed up with the politics as well in Japan. See what your dear has to say tomorrow as well. So all eyes, I say, over at Jackson Hole in the next hour. So take care, everyone. We'll see you all Monday. I think we'll do a bit of a let's have a look for next week while we're here before we wrap up. Next week, this final full trading week of August. Always, actually, let's do that. Always quite quiet after Jackson Hole. No event scheduled. That can't be true. Let's have a look. Select all high impact events. Apply. Oh, is there literally no high impact events? Oh, that's because it's the 30th is what I've done for a Saturday. Excuse the old fool. Apply. There we are. So as I say, Monday, UK is closed. So be careful if you're a Forex trader. There won't be the usual bang of an open on Monday morning from London. London, there's no liquidity coming into the market on Monday. Things are really quiet this afternoon as well. But main events next week, we've got new home sales. Again, as we saw yesterday, pending home sales, existing home sales picking up better than expected this week. So new home sales on Monday, 2:00. Might be live for that on Monday. We'll see. Durable goods on Tuesday out of the United States. The key consumer confidence as well on Tuesday. Also, it's the final week of the month, so we've got PMIs coming as well. We've got the housing ones on Tuesday. Wednesday sees it's quite quiet Wednesday. Yeah, just oil revenue. Wednesday quite quiet. Thursday, Swiss GDP. The continuing claims and the weekly claims are certainly continuing sort of raised expectations because we're of this potential cooling in the jobs market or ongoing cooling in the jobs market because we got this 1.972 reading yesterday for the continuing claims, those that have been claiming for more than 4 weeks. But the key inflation measure is the PCE, and that is out next week as well. Core PCE. Has it slipped as much as many are expected? We'll see. Might give some indications to that. Obviously, backward-looking GDP better than expected potentially. Also on Thursday. So Thursday is a key end of the week numbers. German retail sales, French CPI on Friday. German unemployment as well. German CPI and the PCE price index, the key one again on Friday. So it's a key roundup of the month and the week on Friday. Canadian GDP and the Michigan. They seem to come out very often now, rather than more monthly, but the Michigan consumer expectations and inflation expectations data as well. So some significant data points next week. Then at the end of next week, we have, the following week, we start into September. So we've got the new month. We've got a holiday. It's the Labor Day, and then things really kick off here on the markets. Full volume here back on Tuesday, the 2nd of September. The new month started, and volumes start really ramp up in that week as well. So some key data next week. Don't rule it out altogether, but it is August. It still remains August. We've got an end of month balancing as well. But watch that the PCE data is really the key US data on next week, as well as obviously the weekly claims, the weekly oil readings, and any PMI data we got as well. So keep your eyes peeled, and the best of luck, my friends. If there's no questions, I'll leave you there. Remember, next week, keep your eyes peeled. Tuesday the 26th to Thursday, the 28th, we've got a special promotion, a nice new additional discounts available. So have a look at that. Check your social media, register for it, and you'll be getting 30% discounts on your new your new platforms, revalue your new trading products. Okay, whether it's one step or two step new challenge. The challenge was the word I was struggling to speak to get out then. Yeah, so there we go. I think our value is there for what you get. I think they're really well priced anyway. But if you want $100,000 account, you're new to us. New 25 gets you a 25% discount. If you wait till Tuesday, you might get another 5% off that. So you get $125 off, bringing it to $371. If you bought it today, wait till Tuesday, you might get another extra spend. But you need to register, so you need to go and find it. I'm not giving it for nothing. So go and have a dig at it. Okay. Take care, everyone. I might have some trades tonight. There's not been much this week. We are positive this week, but only by 67 points at the moment from quite a lot of trades, actually. 1, 2, 3, 4, 5, 6, 7, 8, 11. Oh, it's only 11. I thought it was more than that. 11 to 12 closed trades this week. We had a big winner for dollar CAD, pound CAD. The rest of them have been quite small. And there's a hefty loss on the oil trade. Others were okay. Aussie yen, 60 odd pips. So yeah, we're in the money for the week. And there might be some more trades tonight, but it's no more trade. I've got no more open positions. So that's probably the close of the week. Quite a quiet week, but it is August. Anyway, take care. I will see you all again on Monday, probably for the US data. I haven't yet decided, to be honest, but be good and keep your ears peeled. 50 minutes to the chair, Mr. Powell, event of the day from Jackson Hole, Chair Powell. Let's see what he's